Hi and welcome to this week's Big Picture. This is Kim Watson speaking on Monday the 17th of June. So the big picture, it basically looks at a cross-reference of what the central bank's doing and the big money's doing, and of course technicals, and of course what's coming out this week. Now, whilst I appreciate each little bit of news doesn't have a major effect necessarily on the price action, the bigger news such as the FOMC meetings, the Bank of England meetings, etc., GDP, there's some big numbers that come out. We haven't got them all out this week, but we've got some of them out this week, can have quite a big bearing on the technicals. Effectively, I'll prove it at another stage, but for now, just bear with me that the big picture is important. It's important if you want to be on the side of the markets. I keep saying this, but some people spend most of their time looking to try and be trading against what the technicals, the fundamentals are really showing us. So the fundamentals, if you follow the fundamentals, if they're bearish or bullish on a particular currency pair, you're trading most likely with the bigger money. The sentiment may come, the big sentiment. I'm not talking about retail sentiment, which is probably the completely wrong way most of the time. I'm talking about the bigger money. So you following the bigger money, you've got a bit better chance. Even you may be shaken out of odd trades or whatever else because the market doesn't move in a straight line. But all I talk about doing is looking at the risk of your trades, keeping yourself on the better side of the market, and this is what hopefully you'll achieve by following this analysis. So we've got quite a bit coming out this week, and it's all about the dollar. We'll see exactly what is about the dollar come Wednesday, 6 and 6:30. We've got the meetings coming up here. But interesting factor, asset managers, what have they been doing this week, over the last week? All positions have been increased or decreased, whichever way it is. The net positions have all got more bullish for every currency apart from the US dollar. They've got bearish, but they've got bullish on the euro, the pound, believe it or not, slightly more bullish, the yen, the Aussie dollar, the Canadian dollar, New Zealand dollar, and the S&Ps, of course. I say of course, but they've also pushed upwards this week. Now it's just all I've not seen this before, where everything, or for some time, where everything has moved in the same direction. Likewise, look what's happened to the hedge funds. Negative, 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 negative. They've gone negative on everything but from the US dollar. Okay, they're often negative all the way, but if you notice their positions, they've got more negative on everything basically, as their net positions are negative, and they've increased on the negative side. What does this tell us? Well, not a lot really. But it gives us a clue to the way they're thinking. They're thinking the hedges, they're thinking, well, there's not going to be an increase rate at this time, and maybe there's money being pushed into some of these markets and it may roll over. But maybe the bigger money, the asset managers, are thinking, well, actually, we're thinking that US dollar may see an interest rate cut maybe sooner than later. Now, the interesting thing is that this particular meeting we got coming up, we have what is known as the dot analysis. Now, the dot analysis allows the FOMC members to put on a sheet where they think interest rates will be at certain periods going forwards. Now, it was interesting that recently the Fed Powell, the chair, suggested that people shouldn't pay too much attention to these. Now, it's interesting. He's now suggesting you shouldn't look at their forward guidance, but there we go, and where they think things are. The dot. The problem with them is effectively that some of the FOMC members are not there for the long term. They're only there for this year, and then they're replaced. So there's not necessarily a continuation of what's said there. However, there is this tool that's on this CME Group site. It's cmegroup.com/trading/interest rates with a hyphen in between rates. And if you get to there or get anywhere near this, you'll see that for this current month, the meeting of the 20th, there's a 77.5% probability, according to traders here, already priced in that it will stay the same, so no change. But July is a different kettle of fish. At that point, there's an expectation of a rate cut. Now, we don't know what's going to happen, and one thing I would say, perhaps coming back to this, there's an expectation that there may be a cut sooner rather than later, maybe, perhaps not. But we can't price into that, and I certainly won't be wanting to go long on some of these markets, especially the pound at the moment, whilst there's no Prime Minister announced, and even if we do get a Prime Minister announced, the markets may not like who it is. So just be aware of what's happening this week, very key around the FOMC. Now, fundamentally elsewhere, we've got Draghi speaking on the 17th and 18th at different meetings. Flash services and manufacturing data comes out on Friday for the Eurozone. Now that's very important. It comes in after we will have seen the FOMC meeting, etc. out the way. So the FOMC meeting Wednesday, Friday, we've got that data coming out. Very important. I remain relatively bearish on the euro. Fundamentally, I think it's quite flawed, but we'll see what happens and see if there's any signs of any pickup or any sorts in this data that's coming out on Friday. It'll be a good guide going forward. Anything that's given one way may be taken the other way on Friday. We'll see. The pound, well, we've got the Bank of England MPC meeting on the 20th, and Carney's speaking also on the 20th, but later on, or the next later in the week. I'm not. I think it's later in the day, so it's not speaking at that point. Very unlikely to be an interest rate cut or change, increase even, or either when he's not speaking on the same day. So he is speaking the 18th, and he is speaking later at the Mansion House, giving the Mansion House speech. But it's expected that they will just hang fire until Brexit's sorted for now, at least. So maybe into October, but there have been hints of increases at some stage. It's the next possible move, but I think, as I say, it's difficult whilst Brexit's still in transition. Dollar yen monetary statement, also policy statement and press conference coming out on the 20th. So quite key there. What else we got? Aussie dollar. We've got data coming out, monetary policy minutes coming out on the 18th, and then the governor's speaking on the 20th. So those minutes, we've already had the rate cut recently, but we'll see what they have to say about that. It may give us a few more ideas and clues within those minutes that weren't said. Not normally too many, but we'll see. CAD, manufacturing sales this week, inflation data this week. Maybe some more. It's gone positive on the asset managers' money in terms of net positions there, so just to watch for that. So should see a stronger CAD, which would be to the downside. Okay, that's where we are now. New Zealand dollar remains quite weak, but we've got the GDP on the 19th. We'll see some more. Overall, in terms of strength, there's no changes this week. It stays pretty much where it is. The US dollar is still sitting there in terms of economic strength as probably the best, but although softening, we've seen. In fact, we've seen lots of figures softening, and this is quite key, and may see an interest rate cut sooner rather than later. So I am very wary of this Wednesday. Manufacturing figures were down last month, or in the recent month, 52 versus 53 expectation. It was 55 versus 57 previously. So there's a trend of that coming off. Non-farms not coming in where expected. Core inflation is still low at 0.1 versus 0.2, so there isn't that need to have high interest rates seen from that point of view. Retail sales, the core data 0.5 versus 0.5, so maybe okay-ish, although the expectation of retail sales, not the core figure, including vehicles, came in at 0.5 versus 0.7. So GDP running at 3.1. There's still some okay data there with the US, but maybe they'll with Trump trying to put pressure on, maybe they'll try and put the increase on, or decrease, or even sooner rather than later. We'll see. Canadian dollar, you should see firmly in second place. Yen, euro, pound, etc. That's how it sits at the moment. The change is really in terms of price action is actually the US dollars gained the most over the last week, and the yen slipped from first to third. Just dropped back there, gave up some. So let's have a look at where we are on the technical front. Okay, we'll start off looking at the euro, just looking at it in a weekly basis, and then the dailies, where the weeklies are still bearish. There's no real much to go on there. Dailies, it's a bit of a crossover really. It put the higher lows in through here, but it sold off like most of last week. Today it's been pitching up towards the weekly pivot. Why couldn't it just get up there? We'll see. Maybe tomorrow it will do, but I'm expecting volumes to drop off as we move towards the Fed's Wednesday. But we do have data coming out. Fed Wednesday. Okay, pound wise, weekly wise, we know we're in a downward trend here. If I can flick across here, I'll just do so. There we go, downward trend. Now this is important to look at. Prior lows there around about the sort of 24, 25 area may yet still be hit. Not a big day today, you see on this daily basis, and I think where we're sitting around these lows here, we could get reversals in these markets. We could see some buying coming in leading into the news, just by bigger money where it's just sort of hedging itself really. Or may just be see positions closed off, bearish positions closed off. If you've got to close them off, you've got to buy the other side, haven't you? So in its turn, we'll move things around. Dollar yen. Well, it's been in a reasonable downward trend there, lower highs, lower lows sitting through there on a daily basis. It's just consolidated for the last 2 weeks, really nothing to write home about here. I would expect we'll see a breakout of that on Wednesday, but we'll see. But it's slow. It's not a day trading currency, but swing wise, if we to see a break of the lows there, maybe we've got a chance of running down to its monthly S1 area. The upside, alternative upside there, which at the moment, as I say, it looks like it's got more potential for the downside, but if it was to push up, where the monthly pivot would be a near-term target, but that daily 50 must be looking good above. Okay, Aussie dollar, I've still remained bearish on this. In fact, I think on my sheet I've accidentally left it as a sort of a not too sure on the dailies, but I changed that to bearish. But again, it's a bit like the pound, coming down to recent lows, and we've got some other lows below us. However, at this juncture, regardless, the data's not been good, and we could see further downside there for the Aussie dollar. And no, I'm going to go straight to New Zealand dollar first, and then come to Canadian dollar in a minute. New Zealand dollar, pretty much similar picture, near recent lows. New Zealand dollar, and well, we could pitch through some more. As I say, we've seen a bit of money coming in from the asset side, changing a little bit. It was, I mentioned last week, it was pitching towards sort of low targets here. Maybe we'll get a bit more reversal. Lots of things could change come Wednesday evening. Canadian dollar then. Canadian dollar sitting there. Let's just switch across there. Canadian dollar, well, it's sort of a reversal off its weekly 50 there, quite a big reversal. The oil prices really haven't held up too well for it in real terms, but even though there's this the risk in the Gulf, what we're seeing here is a strong up day on Friday, eventually pushing through its weekly pivot. It's still fundamentally slightly stronger than some of the other markets, and well, we could see a bit more correction to the downside. It's just into resistance here at the moment. We'll see how it goes, but what a small day today, and we may just see more of that leading into Wednesday. And we've got GDP for the Canadian dollar out, I believe, on Wednesday morning. Okay, that's pretty much it there. Let's have a look at the S&Ps. If we can start off looking at a weekly picture first. So we go weekly picture on the S&Ps. Solid old week. The previous week we saw a little bit of follow through, but it's still died back a little bit here. Doji looks sort of weakish. This could be the market that falls away if interest rates are sort of not cut. Maybe it may roll over a little bit more. There's possibly some people thinking there may be a cut in store, and I don't know, maybe priced in a little bit, but For now, it's struggling there. It sort of dipped off towards the mid of last week and picked up towards the end a bit, although very small. Just as we start looking at this and be trading it intraday, it's become lower in terms of its volatility, just outside. The only thing, or the key thing about this is this sort of lack of all these dojis lying up here, is it suggests weakness or a lack of strength to push up. Interest rate cut will see us shoot through those highs there, I would have thought, and maybe running towards those prior highs there. So over the next couple of days, no interest rate cut, may see it roll. Okay, that's the S&Ps, and I do talk about it occasionally, and if I can I will just talk about gold very briefly, as I haven't covered it for a little while. It's had a bit of a push up here. We're back into some sort of resistance points here on the weekly chart there, prior highs, key level sort of thing. It's pushed into that in reverse. So last week ended up with a doji not looking massively bullish at the moment, and a divergence that's sitting there on the dailies. Now it depends how you ride this out, but maybe there's a breakdown in store. But I think so long as there's the problems in with the Gulf and oil tankers being attacked, etc., we could see gold being there as a bit of the safety currency in effect. So it may just consolidate, but if all things seem to get ironed out, I won't be surprised if this breaks the low of the 11th of June, and we'll see a bit more of a correction, maybe back down to the sort of levels it once was sitting at. Okay, that's pretty much it for me. I hope you have a great week, and I will speak to you soon. Just a reminder, if you've held on to this far, of course we've got an open day in our trading room for 2 days, tomorrow and Tuesday and Wednesday. Please feel free to drop Sam at easytrader.com an email, and she will set you up for one of those both of those 2 free days. There we go. Have a great one. Bye for now.